Hello Financial Hub, and welcome to another episode of our financial market breakdown. So as you can see today, I'm self-quarantined here with Ken and my partner Taras, and we're just keeping it safe. You know what's going on in Kenya. We already have more than 3 cases of confirmed cases of coronavirus, and for now I'll take that off. It's just slowing me down. And around the world, we're seeing cases rising to more than 170,000, and deaths are always increasing day by day. Luckily, here in Kenya, there are no deaths yet, and we pray it continues like that, and that the country is able to contain this virus, and we don't have that much spread. But anyway, apart from that, the market has been reacting to the coronavirus. Beginning of the year, we didn't have much of this reaction to the coronavirus. We weren't sure how far it will go, but once the World Health Organization declared it as a pandemic, oh, that sent fire around the markets. So we've seen last week, actually not last week, yesterday we've seen market fall, the third highest fall in history, as market dropped more than 12%, 13% around there. The highest we've seen was in 1987, which was Black Monday, which market dropped about 22%. Before that, we had the second highest, which was in 1929, where market dropped almost around like yesterday, around 13 to 14% in a single day. So market yesterday did the same. Once the market dropped more than 7% during the first 15 minutes of the open, market was halted. We had a 15-minute break, and market came again and continued trading and fell further down to that 13% that I was talking about. So markets have been reacting to this. We've seen oil is still on that downward trend. We're about to break new lows of the year. Gold has also been dropping off the roof. We're also seeing the US dollar is it's spiking up and down. VIX, the volatility index, is way above the roof. We're reaching those highs of 2008 financial crisis, and these are unprecedented times, guys. These are unprecedented times, and times like this are when people are also blowing the accounts. When volatility is way off the roof, people are trading and thinking there are opportunities everywhere to take trades. This is the time we tell you people to sit tight and watch the markets closely, watch the markets keenly. Apart from that, we're seeing around the world the central banks have been cutting interest rates. We had an emergency rate cut in the US by the Feds on Sunday, which they dropped the market more than 100 basis points. That is also unprecedented. Back during the financial crisis, the highest basis point drop in a single day and scheduled meeting was 75 basis points. So seeing that the market has now gone, or the Feds have taken the interest rates down to ZAP. ZAP basically stands for zero interest rates policy. It means that the economy is really doing bad. So they do this in order to stimulate. Apart from that, they're also pumping in money. They're doing quantitative easing, pumping more than $700 billion to buy treasury bills and also agency mortgage-backed securities. And also they want to bail out the airline companies, which have been going bankrupt, most of them. So that's basically what's going around the markets. Apart from the Feds, also we've seen other, the Bank of Canada, Australia, they've all been cutting interest rates. So, and also the Bank of England for the people who follow the pound. So today we'll just do a few analysis of a few pairs that we're looking at. We don't want to get really confused with what is going on, so we'll just do the main pairs that are really high probable. I'll cover my usual, and Ken will come in and cover the rest. So apart from that, let's get in and analyze the market. But before we go down to the charts, guys, we just wanted to let you know that last week we had a successful first Forex masterclass here at our offices in JPOT Towers, ICA building, and we had a few students who came by, and we had them here for about 3 days where we did trading with them and showed them how to analyze the markets and looking at the market from different perspectives, things that are not really being shown out there. So we had a successful time. The next Forex Masterclass is yet to be confirmed. The dates were yet to launch that. But before that, there's something more exciting that is coming before the end of the month. On the 30th of March, we'll be launching our subscription model here at Financial Hub, which will be basically for people to, once you pay a certain fee, which is basically $35, you get access to a private Financial Hub membership group, where we'll be sending you, every week we'll be sending you 2 videos, unlike the ones we do here on YouTube, like this one. And like this one, it will be mainly focused on showing you which trades we're looking at, high probable trades, where we are entering, where we are coming out, and how we are managing the trade at all that time. So apart from that, it will also include different teachings about the forex market and how to analyze the market. You also get our exclusive Financial Hub book, Imagine, for just $35, and you get all those videos, all those analysis. Apart from that, you also get email alerts. You also get, it has a lot, it entails a lot. So we'll be launching that soon. We'll be talking more about it, showing every detail that it entails, and very soon it will be available to you for only $35, which in Kenya shillings is 3,500 every month. It's a repeatable repurchasing product which you'll be paying every month. So that's what's coming soon. We're yet to show that. We'll do a video on that, but that's what we have cooking in our books. Okay guys, so now we're down to the Aussie dollar. For those people who like Aussie dollar, I covered this pair yesterday when I did a deep look into Australian dollar. What's next? So this is just a broad analysis to that, but you can go onto our website and look at that article. I'll leave a link below. But looking at the chart now, this is the weekly chart. So why I've zoomed this out is because we need to look back at history and see what happened. So we haven't seen this high volatility and high such moves since the crash in 2008. So if I take us back to that time, we can get to see that we had a 6% drop, which was this candlestick, followed by another 16% drop the following week, and market had a 7% rebound, what we can see here, and a final 10% drop before the market came to a halt. So looking at that, it can give us a broader picture or what to anticipate with what is happening right now. Of course, the market doesn't react the same way it does all the time. So we are not looking for a perfect replay of what happened in 2008, but we're just looking at that for guidance. It's just like going to your forefathers to ask for guidance, because what they did can really help you look into the future and see what happens next. So looking at what was happening over here now, last week we had a 7% drop, over 7% drop on the Aussie dollar, which was a really huge drop, something that we don't see all the time. As you can see, we saw that last 10 years ago. So if you go down, before even we go down to our daily chart, what you're seeing here, this level is what will act as our support region right now. And if I can get to highlight that, so this whole region is a major region, because as I covered in the article yesterday, three things can happen from traders. The traders here who are waiting to see if the market will break, and if it breaks this lows, they'll enter shorts. The people who are waiting to see if the market will respect this level and bounce and go back up, and such people will enter with their longs, and the sells, the people who have been selling the market will take their profits, as well as those people who are hanging in between the fence waiting to see which side will win, either the bears or the bulls. So looking at the daily chart, we can see this downward trend line. So we are sort of having this double trend line. So there's a huge trend line which is on the daily, monthly chart and weekly chart. But if you come down to the daily chart, we can see we have this one. So we had our first bounce, second bounce, third bounce, fourth bounce, and on the fifth bounce we sort of had a classic fake out, which market had broken beautifully above, but we didn't have that strong momentum to push the market up, and soon after the market came tumbling down, and that's what we're seeing till today. We've been down on a downward trend ever since the beginning of the year. So we've been having US dollar strength and Aussie dollar weakness. So I'm targeting 0.60 as my support level at the moment, and something that we've learned from the markets time and time again: always look for the trend and trade in the direction of the trend. Trying to predict the market is going to turn and go against what is happening happens rarely. For this market to fully turn and go the other side is not that common. So looking at this, my downward boundary, I'm looking which is in line with where I'm targeting at 0.60 level. So we can see market has been having a strong momentum. As I covered on the article, market was ahead of reality when we had this week over here. So it was last week's Monday open, after what we saw between Saudi Arabia and um, Saudi Arabia and Russia about the oil trade, the oil wars, as well as also coronavirus. So we had this spike open to the downside, other markets opened with a gap. You've seen oil with a gap which hasn't yet closed. So we are watching that. So market was ahead of reality on this day, and later on the rationality came back into the market and market started dropping now with much more better candlesticks. So if you go down to the 4-hour chart, as I've covered over here, you can see I said market was ahead of reality, and we're sort of having that 1 2 3 4 5 Elliott wave analysis. I'm sure I've adjusted this according to the way the market is right now. Last week I didn't have such a wave. So currently this is what I have. We can see market had rebounded to 38.2 Fibonacci level and spiked down now to not 161.8% fib extension level where profit was taken. That's why you can see this strong spike back up, and now market is sort of in a downward low volume momentum, which indicates a lot that the market might be coming to a halt very soon. But as I said, trade in the direction of the trend. Don't always try and say the market is going to turn. So what I'm looking at right now, as I covered also on the analysis, I'm also sitting in between the fence to see who will come out as the winners between the bulls and the bears. So sometimes it's good to sit down and watch the market, just hold your cash, be safe, and see what is happening. As well, also we are seeing a lot of volatility in the market, so you really need to be cautious and use proper risk management, which we teach here at Financial Hub, and we covered that last week with our students. So basically that's what I'm looking at on Aussie dollar. I'll do more analysis on this, more breakdowns, and I'll cover up this on the articles on the website. So that's basically what I'm looking at. I've basically said I'm hanging in between the fence, ready to see what will happen at the end of this week or later on next week, once the market settles down from the irrationality that is happening from the panic of coronavirus. So now we can go down to USD CAD. USD CAD. So I won't spend that much time on this pair because at the moment I'm also sitting tight on this one. So I'm basically out of all my positions. I don't have any positions on any trade at the moment. I'm just watching and understanding what is happening in the market. So as you can see, this is a weekly chart. We covered this the last time I covered USD CAD. I think that was in episode 37. When the market was still around here before we had this huge gap open and market rallied all the way up. So we had this time when the market broke out, had a retest of this trend line, broke out, had the retest of the support region 1.330 region. We didn't really touch that point to the T, and market has been shooting up ever since that time. So if we go down to the daily chart, as you can see over here, this is what we've been having. So market had this push one, had a correction, we had a bounce of the trend line, another second bounce, and market has been shooting all the way up. So currently adjusting this, unlike what I had on my Elliott wave analysis last week. I'm waiting to see something of the sort. Maybe this was a 1 2 3 4 5 move that we're waiting for at the moment. So I'm also still sitting tight and watching this pair and seeing if we'll have a correction very soon. Why this market has been moving against the other USD pairs, because as you can see, for the past few weeks the US dollar was losing, but on the USD CAD we've been seeing the market rising higher and higher, meaning that the US dollar has been gaining against the Canadian dollar, and this is mainly because of oil. So if you look at the oil chart, you'll get to see that the market has really been moving to the downside, which has really been affecting this pair. So as you can see, here's oil. Oil has been on a crazy downfall ever since the beginning of the year. So the market has been pushing down, and they are highly correlated with USD CAD. They move inversely to one another. So when oil is moving down, USD moving up, but not all the time. But when there's such momentum, such movements, it's easy to see the USD CAD moving in tandem with this pair. So if you go down back to our USD CAD, you can see the pair has been moving up. If you look at the dollar index, as I covered last time, here it is. We've been seeing we've had a correction. So the US dollar has also been gaining traction for the past few days, but overall it has been falling since we had this top at 99.8 dollar index level. So I'm still sitting in between the fence on this one. I'm yet to see what will happen in the market. We've been having spikes to the upside. You can see on this daily candlesticks up here, we sort of had a first bearish after having this bullish momentum, first bearish candlestick, which sort of people thought that the market will fall, and the market shot up after having this correction to touch 1.375 support level. So market has been shooting up ever since that time. So right now we are sort of in no man's land, still waiting to see what will happen with the pair. So I'm sitting tight. The US oil will have a lot of effect in this market at the moment because of what is going on between Saudi Arabia and Russia, and just the oil market being affected with also coronavirus. So that's what I'm watching on right now, and basically I'll do more follow-ups on this. So I do not have any trades on this, still watching tight. If you look at the 4-hour chart, I'm just analyzing using my Elliott wave analysis, which, as I said, we teach here at Financial Hub. So if you want to learn how to use Elliott wave analysis to guide you to use as a principle, as a way of knowing where the market is heading, you can purchase any of our online courses, which you can learn at home even with the coronavirus ongoing. So you can learn anywhere you want. So basically that's what I have on USD card and all my pairs. Ken will cover the rest, and I'll leave it at there for now, and I'll see you next time during our analysis.
So hi guys, Ken here. I'm going to start off my analysis. This time I will not look at commodities. I will only focus on currencies. So precisely I'll do 3 currency pairs. I'll try and look at what is happening. Before I start off my analysis, first of all I'll say that the manner I'll use to break down these markets will be sort of a feel of what we'll be doing in the subscription model that Caleb talked about when he was introducing the video. So this is one of those videos that will be really keen to details, and for those who will be paying for the subscription and for those who will be moving with us to the subscription model, be sure that you'll get something valuable and something that will be of help to you. So first of all, on Sunday we got a 50 basis rate cut. Caleb talked about central banks cutting rates after a 100 basis points rate cut by the Feds, which brought back interest rates to zero, and that combined with a massive rollout of $700 billion to the economy means we should be looking for short in the dollar. We are looking to sell off, for the dollar to sell off big time, and based on that analysis, the best trade for me is euro dollar long if you want to sell the dollar, because it's the currency that is highly correlated, the currency pair highly correlated to the dollar. So let's look at what has been happening on EURUSD for the last 10 years, and then we'll try and quantify what will be happening probably in the next 1 year, 2 years, and probably even in the next 6 months. We'll move from that way to see what is happening. So generally, all the way from 2008, when we had the first crash in the market, the euro has been moving lower. So you can see from topping at the 1.60 mark, the euro slid lower, moved lower to the 1.25, supported by 1.25. We had a rebound during the 2009-2010 correction, which was a first move. Then we had another move lower, creating a lower low, and a move higher again, creating a lower high, a move lower, and a move lower. This big drop again from the 1.40, which made the euro make new lows which have never been met at the 1.05 for the last 10 years, was catalyzed by the debt problem in Europe around 2014-2015, and after that the euro consolidated for quite some time. In 2017 we saw the euro again move higher to touch 1.25. At that time the main reason for the euro moving higher was dollar weakness, and for me at least I was able to witness this move higher because I had started trading markets by then. I found the euro consolidated when I was learning how to trade, and I got this move higher and again this move lower. So anyway, looking at what is happening from a monthly chart, trying to see what will be happening in the next 1 or 2 years, then it's clear that if the euro is supported by the level which it's currently trading at, the 1.075 level to be precise, which is a zone for me, coincides with the 78.6 Fibonacci level. You can see we had a consolidation, a breakout, and a move back lower. So if we get a break above 1.115, so note that for the longer time frame, if we get a break above 1.1115 and a break of this trend line, then that means the beginning of a correction. Trust me, the euro will come back at least to trade at 1.32, 1.35. I can't tell you exactly when, but that will happen. And the main reason for that move taking place will be dollar weakness. The dollar is currently trading at high levels, and if the dollar is going to sell off, then the euro will likely move higher to trade at the 1.3 to 1.35 level. Fundamentals already pointing down to a dollar weakness and to some good move on the downside, and that is the reason why I'm looking for these longs on this currency to trade it as you move higher. So that is my first outlook on this pair. You can see clearly last month, February, we had a close above S1, a pin bar, and a spike to the 78.6, suggesting that it could be moving higher. So if I go down to the weekly chart, so on the weekly chart, the euro has been sliding lower. So you can see we had this slide lower from the 1.25 all the way to the 1.075, closing off this gap down, this gap up, which happened in 2017. I remember that gap precisely. So after that move to the 1.075, you can see clearly the formation of a good hammer and a continuation of a bullish engulfing, forming a 3-pin pattern and a break of this descending channel. So the break of this descending channel and the touch of 1.15 first of all marks the beginning of a reversal for me from the weekly chart. This is because the pattern of lower highs and lower lows has been broken. So if you can keen on looking at this, you will discover this was a lower high, a lower high, a lower high, and this is a break and a move higher to touch 1.15. This sell off to the 1.1, 1.108, 1.1 level is a sell off to correct this move higher and probably to retest this line. So if this line keeps on holding, if this line on the descending channel keeps on holding, and we get a close above 1.1250 on the weekly chart, then I'll be looking for longs to take us to 1.175 and ultimately 1.12, creating new highs. If I plot my fibs again from the $1.075 mark, then you discover that this is the 61.8 Fibonacci retracement level. The euro likes trading at these zones. These pullbacks often end at 61.8 retracement level, and if that's the case, if history is to act as a guide, then we could be getting a move from here taking us higher to the 1.175 mark. If I go down to the daily chart to show you what is happening on the daily chart, then you discover on the daily chart we had this move higher that we still talk about. So clearly you can see we were collapsing, we bottomed at the 1.075, and we had a straight move, a 700 pip move to the 1.15. Markets are volatile, so such a move only took 2 weeks, while normally if the markets are not volatile, that will take so long. So if I draw that line, and again I use my Fibonacci from this mark, from this point to this point, then again you discover 61.8 was holding, and that's a good level. So as long as markets are trading above the 78.6 level and above this trend line, for me I'm looking for longs on the euro. I don't see any opportunities to benefit from short trades. But for now, on the short term, we can still get this correction resulting in the formation of a Gartley pattern and also squeezing some longs. So we had this drop, this is a correction to 738.2, and we could be getting a correction to touch 27.2, 1.09, 1.0850, 1.1 levels before now they move higher. So that's my outlook on euro. I want to go down to the forward chart. On the forward chart there is nothing precise that I can show. So that's my outlook on euro. You can see clearly I had my tool, but markets never managed to close above my level. So I'm waiting for these levels. If we get to these S2 levels, then that's a better buying zone for me, which coincides with the 1.10950 before they move higher to trade above 1.115. If I'm right on my call, and I think there's a high probability that I could be right. So that's my outlook on euro USD. So the next pair that I look at is GBP USD, also a pair that is traded against the dollar. So long term, if you look at GBP USD from the weekly time frame, you discover that we had a drop all the way from the 1.7, 1.65 mark. After Brexit, we had a catalyzed move lower to make a low at the $1.20 mark. After the drop to 1.20 mark, we had a correction to 1.4, and again due to dollar weakness, we saw the pound sliding all the way to 1.20. This resulted in the formation of a double bottom from a big picture perspective, If you look at it keenly, you discover that this was a bottom and this is the other bottom, a double bottom. So what can we expect? Clearly you can see that we had a good pattern formation of lower highs and lower highs, lower lows and lower highs, I mean. And after the optimistic results of Brexit, you can see the markets bottomed at 1.2 and the move higher started. We managed to go higher to touch at least the 1.35, and after the 1.35 mark was touched, due to profit taking and other factors, the market started correcting and selling off again. Last week, due to the dollar strength that was there, after the market started crashing, we saw the pound move lower from the 1.3 to the 1.23 mark. If you use your Fibonacci to plot which retracement this could be from the 1.20 bottom mark, then you discover that this was 78.6. Based on that, we can expect markets to come back higher to 1.4 if I'm right, and if this level will act as a good support level. So my favorite trade for the week, and I think for the next 2 months, will be pound and euro dollar long. I'm looking to sell the dollar if I am right. If we get a turn at this point, then I'll be looking for those trades and I'll be executing them. I'm not yet in. I'm still stocking. I'm still watching because markets are too volatile now, and there's a lot of noise from the geopolitical space. So I'm still watching to see what's happening. Looking at it from a daily chart, you can see we had a first bounce, second bounce, yep, and now we get a third bounce. So as long as we are trading above 1.2250, then I'm looking for longs. First target 25, second target 2750, third target 30, 3250, and then ultimately 35 and 40 on the way higher. Obviously I can't hold that trade for that long, so I'll come in and out, but as long as I have the direction in my hands, then I can be able to trade it. On the 4-hour chart, this will be my entry, but again, you see we came lower and we are now trading at this point. I think this is a better entry, and if we get supported by this level, then I'll be looking to come back in and ride this market all the way to at least 1.30 as my first target, which is a 750 pip move. Due to the high volatility, I think that is a move that will take days for it to play out. So those are the two pairs that I'll be looking at primarily. I want to go into commodities. There's a lot of noise there, and I think many of the trades that we were looking for there, many of the moves are almost over, so I won't focus on that unless another move develops, and we will do that next time. So that's my outlook. Hope you guys have enjoyed, hope you've learned a thing or two, and hope you'll execute and learn from these trades. So that's it. See you next time.